The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. So it's 2021. Feels about the same. Last year was a pretty incredible year if you were an investor. It was a pretty amazing year. We did have a crash in between, which screwed a lot of people up. But aside from that, it was a pretty amazing year. If you bought something and went up, it was easy. The last time I remember it being easy, it was a while ago. But yeah, we had a giant crash in March. But if you could hang on through that and actually buy stocks at the lows, it was one of the easiest years we've ever had. And the one thing I can tell you about 2021 is that this year, it's not going to be that easy. It's not going to be that easy. It's going to be harder. It's going to be tough. It's already tough. Stocks collapsed out of the gate today. It's going to get tricky. We have some risks out there. It's already started off not so easy. Now, one thing I've always noticed is that there's usually a big reversal of trend around New Year's. So going into New Year's, if stocks are going up, after New Year's, stocks usually go down and vice versa. And you can see that's what's happening right now. A lot of that is for tax reasons. So if you think about it, if you're sitting on a bunch of winning positions, a bunch of stocks with a lot of capital gains, you don't want to sell them on December 31st because then you'll have to pay taxes in 2020. You want to sell them in the new year. So I think a lot of that is what's going on is for tax reasons because people were sitting on winning positions and they didn't want to sell them in 2020. So the first thing they do in 2021 is sell those stocks. And that's kind of what you saw in the stock market today is that a lot of the stocks that had gone up a lot ended up going down. So, and going into last year, we had the peak of speculation. It was the peak of speculation. By the way, today I found out, this has been around for 2 months. I didn't know about it. I found out that there is a moonshot ETF. There's a ETF company called Direction. And they have a moonshot ETF where they invest in stocks that they think are moonshots. That's not the type of stuff you see at the bottom. You have people on TikTok giving advice, giving financial advice. Bitcoin is going bananas. We've talked about Bitcoin before. We're going to talk about the ARK funds run by Cathie Wood. We're going to talk about that. They've been going nuts. SPACs have been going nuts. So let's take a second to talk about some of these things. Because these are all signs of a great deal of speculation. And I've been bullish. I've really been bullish. I've said that stocks are going to go up, and now I am exercising a degree of caution because there is a great deal of speculation out there. So SPACs, what is a SPAC? SPAC, Special Purpose Acquisition Corporation. It's a blank check company. So basically, a company goes public, it lists on an exchange, and it just has a bunch of cash on the balance sheet and nothing else. There's no business. And the purpose of that SPAC is to buy another company, and then that company becomes the actual company. So, for example, there was a I guess it was a TRNE, Trine Acquisition was the blank check company. And it bought a company called Desktop Metal. And then it sort of de-SPACs, and then it just becomes Desktop Metal. The ticker is DM. And that's really kind of a new way for companies to go public is through a SPAC. It's a shell company that goes public for the purpose of buying another company. And this has become kind of an interesting way for companies to go public without going through the traditional IPO process, because the traditional IPO process is a big pain in the ass. Now, SPACs aren't new. They've been around before. But usually when they show up at the top of the market. Now, there's hundreds of SPACs that are being listed, and some of them are very good. Some of them are legitimate companies. Actually, the one that I mentioned has all the big VCs behind it, plus Chamath. It's a real company. There's a bunch of garbage. There's a lot of garbage that's being listed, and it represents opportunities. If you have the time to research these SPACs, then you can really pick out the good ones. I kind of don't have that time. But there's a lot of bad ones. And the longer this goes on, the more garbage SPACs there are. There's just a lot of garbage SPACs that are going public. At the end of 2020, we were having a few dozen SPACs listed each week. And this is definitely a sign of trouble. Let's talk about Cathie Wood in the ARK funds. There's this woman named Cathie Wood. She's 65 years old. She runs ARK Investment Management. That's ARK. And she has a very specific investment strategy. And what she does is she buys innovation stocks. This is 3D printing stocks, solar stocks, electric vehicles, stuff like that. She's been buying what you call these innovation stocks. And of course, none of these companies have any profits. In some cases, they don't have any revenues. But they are all based on transformational technologies. And she's really the only person out there that is buying these things indiscriminately. Now, she's very different from other investors because other investors look at this from a Graham and Dodd standpoint, and they analyze balance sheets and earnings and stuff like that. And she doesn't do any of that. Now, she doesn't have mutual funds. She has ETFs. She puts this in an ETF. They're actively managed ETFs, which is very uncommon. There's not that many actively managed ETFs out there. And the funny thing about what she does is her funds are perfectly transparent. You know what's in the funds. She, on their website, they post a spreadsheet with all their trading activity that you know exactly what they're doing. She posts the holdings and all the trades every day, and you can actually download it in a spreadsheet. Now, her main fund, which is ARKK, her main fund was up 150% last year. Now, keep in mind, she has $50 billion in assets, and she's charging 75 basis points in fees. So that's $225 million in fees. It's not really that big of a firm. There's 20, 30 people working there. That's a lot of money. I'm in the wrong business. Like, what am I doing wrong? But her fund was up 150% last year, and part of that is due to the structure of the ETF, because these ETFs don't have a lot of stocks in them, and some of the stocks are small and they're not very liquid. So when you buy the ETF, it creates pressure on the underlying stocks. And from Cathie Wood's standpoint, if you could make money by pushing a button, how many times would you push the button? If you could make money by pushing a button, how many times would you push the button? She was up 150%. She's going to continue with this strategy until it stops working. And then, even though it's not working, she'll still continue with the strategy because that's what she does. She's not going to be able to shift gears and suddenly start investing in value stocks. That's not in her DNA. It's not what she does. She will ride this strategy all the way to the bottom. And we know about Bitcoin. Bitcoin went bananas over the weekend. It went up over 34,000. Now, we've been talking about Bitcoin for a while, and I've expressed a great deal of interest in it. I own Bitcoin. I own it from about 10,000 back in September of 2019. So this has been great. And I actually went on Twitter and said that if Bitcoin went through 20,000, it would get to 30,000 in 11 days, which pretty much happened exactly. It was like 12 or 13 days. Bitcoin is starting to get into a little bit of a bubble. It is starting to get into a little bit of a bubble. Retail investors are starting to pile in, but you're still having big institutions buy it. And I do think it gets to 50,000 in the short term, and the challenge is going to be to hang on. And, you know, for me personally, at some point, I will have made enough money and I will sell it. Anyway, last year, 2020 was hard for a bunch of reasons. We had the pandemic, and people were isolated, and they were alone, and they were miserable, and it was a very tough year. The election was tough. The riots were tough. It was a very hard year. But from an investing standpoint, it was amazing. It really was one of the easiest years I've ever had investing, and it's just not going to be that easy this year. The last time I remember we had a super easy year was 2013. Stocks were up about 30% that year. It just does not come along that often. Like, for example, do you think Tesla is going to go up 1,000% again? Is it going to be a $7 trillion company? I tend to think that's not going to happen. So you're going to have to get a new idea. You're going to have to get new ideas. You're going to have to get a different trade. Now, one investment theme that I've been exploring in some detail is the travel explosion. The fact that, after the pandemic is over or after most people are vaccinated, people are going to be taking big vacations. They're going to be traveling a lot. The travel explosion is going to happen. And I have a bunch of stocks that benefit from that theme. And this is the thing with markets that you need to understand. They exhibit a property known as non-stationarity. Non-stationarity. What non-stationarity means, it's a game where the rules constantly change. And first day of the year, January 4th, the rules changed. How are you going to cope with it? The rules change all the time. If you want to learn from someone in the market, don't learn from the person who was making 150% in 2020. Learn from the person who is making 10 to 15% a year and has been doing it for 40 years. These are the people with the ability to change when the rules change. They are the ones that are flexible enough and adaptable enough to change the way they invest. Most people are just a one-note samba. They do one thing forever. Sometimes it works, sometimes it doesn't. I can say for certain that Cathie Wood won't be remembered as one of the all-time great investors. For now, her strategy is in favor. Someday it will be out of favor. And my guess is that you have a strategy too, and if it is working, you feel pretty smart. This year is going to be tougher than last year, and I'm just trying to manage your expectations. No Lamborghinis for you this year. I'm Jared Dillian. This is the Jared Dillian Show.
The Jared Dillian Show.